every guest. Today I have Cheryl Stokes with New American Funding as my guest today. And Cheryl, every guest gets to say their version of Really Mary. So you're up.
Really, Mary?
I love it. So Cheryl, thank you so much for taking the time to join us on the Really Mary show. Obviously, what we want to do is educate folks about lending and about getting a loan and getting a loan specifically so that they can get into their dream home and in a hot market win that business every single time when they put that offer in. Because in the market right now, we're having multiple offers and we want to put our best foot forward. So I know, Cheryl, you have a lot of tips and tools and tricks for us. Should we go ahead and put up the slides now, or you want to say a couple things before we launch?
You can go ahead and put up the slides, but yeah, the pre-approval is key, especially because it's a hot market. You need to know that you have all your ducks in a row before you get started, for sure.
Without a doubt. That, to me, and again, this is, I might add, Cheryl Stokes, her what is it? NMLS number?
NMLS, yes.
That I hear people talking about on their voicemails is very important to have. So let's jump right into it then, Cheryl, and see what we've got if we can.
Okay.
Computer is going to help me here. Help me. No, yes, it's going to help me here. I'm confident of it, Cheryl. No, it's not. It is not.
It's not. Okay.
It is not. Hold tight. We'll come back to it one more time. Let's see what we got. Let's see if we can make this happen. You can tell that it's real and not staged. Because when technology doesn't work, it is always exciting to have it not work.
That's a word. That's a word. Exciting.
Yeah, exactly. We get to see your face again. Yeah, great. Interesting. Let's see if we can make this work. It is not letting me make it work. So let's just make this stop share. Let's see what we got. Cheryl?
Okay, we're going to wing it.
We're going to have to wing it and go through these slides as if I knew what was on them.
Okay.
So talk to me about, the home buying process.
So the home buying process, really, in order to get started and get pre-approved, you need to have a couple of things in the top of your mind. What's your budget as far as the amount of cash that you want to spend? Because at the end of the day, even with low down payment options, you're going to need some cash. So know in advance what you can afford to spend and what you can't. And that way, when someone asks you, what's your all-in number for closing costs and down payment, the loan officer can work backwards from there and determine what you can do as far as the down payment goes. So number one, have your cash straight.
Okay.
Number two, have a good idea of your credit. A lot of people have credit monitoring. Those are great for knowing that your credit's going up or down, but honestly, they're not a complete accurate figure of what your score is, but at least have in your mind an idea that it's in good shape or it's going up. And if not, know why. So you can discuss that with your loan officer as well, because there are some things that we can do to help with that process. But that's the first thing we're going to do on an application is take your basic information, know where you think you want to begin, and run credit and determine what we can and can't do.
Got it.
That's kind of the first process. And then the results of that inquiry will determine what you can do, what your rates might be, what type of loan product you might need.
Sure. So that, there's a lot of different types of loan products out there right now. And
there are.
Talk about a little bit about some of those. And, if I'm a first-time home buyer or this is my 100th house and I'm going after a luxury home, what's the gamut of that?
Well, I mean, there are so many loan types. There's USDA, which tends to be more in rural areas. There's VA if you're a veteran, which is a great option. We determine your eligibility and we help you get a VA approved loan. And then there are the ones that more people hear about, which are FHA and conventional. FHA is a guaranteed loan. It's a great way for a first-time homebuyer to get in. It's a little more flexible. It's got a lower down payment of 3.5%. It allows us to do a lot more for a first-time homebuyer. A conventional, there is a 3% conventional, but there are income limits. But then there's also 5% conventional as well for a first-time homebuyer. And conventional also applies to people across the board who may have purchased 10 homes in the past, and they're just going to get a conventional loan with a 20% down payment. But that is by no means required by other buyers. You can put as little as 5 if you're not a first-time homebuyer, and as little as 3 if you're a first-time homebuyer.
Okay.
And then, of course, we have jumbo for that high dollar property. The rate is $510,100, I believe. For anything above that is a jumbo loan.
Such a random number.
I know.
100. How they come up with these, I don't know. Do you?
I do not. I think it's an average of home sales, and it's redetermined every year what that rate is going to be. It's gone up the last 3 years in a row.
Okay. Well, that's good to know for folks. Now, what if somebody's looking for second home, Cheryl? I mean, what are my options for second home?
Second home has a minimum of a 10% down payment required. You do have mortgage insurance if you pay that 10% down, but there are options with mortgage insurance as well. Depending on your credit, you can opt to do a one-time prepayment of mortgage insurance, or you can pay it monthly, whichever works best for you. Or you can pay the 20% down and not have that, but 10% is minimum.
Okay. Now, sometimes folks get into a condo, whether it's a second home or first home. Talk about the hoops that we have to jump through.
The joys of condo purchasing. So the main thing that everyone has to remember is that we have to get a condo questionnaire and approve the building, which is just as detailed as approving the buyer. So the buyer comes in, they've got 20% down, they want to buy in a condo, it's a second home. We need a full review of the condo association, which means we're going to look at budget. We're going to look at the condo docs, how they set up their articles of their declaration and their articles of incorporation. Do they have litigation against them? Do they collect reserves? And what we're really doing is approving the condo's viability. This is the way I explain it. We're approving the building's viability, just like we're approving the borrower's viability, because you as a borrower don't want to go into a condo that might have major litigation, which is going to be a special assessment down the line. You really kind of want to know what you're buying into, because you're buying walls in, a piece of the building, and you need to know what else is going on in the building. So it's for your benefit to know those details, and it's for our benefit because a lender is taking a risk on a property.
Without a doubt. And when you said walls in, it's really like, from the studs of the condo, It is what you get to buy. And by the way, that's what you're insuring as well, right?
Absolutely. You get HO6 insurance, and that's walls in. And then the condo association itself carries the building hazard, the wind, the flood. Now, your walls in HO6 will also include wind.
Yeah. So
here in Florida.
Concept, right? So we've now kind of talking through and the slides that we can't show because apparently technology issues that John may add up in the recording later. So stay tuned for the recording. We get this offer approved. We've got our pre-qualification. Now what? What has to happen for folks that haven't been through this process before?
So the first thing that happens once you have a pre-qualification, now you have a contract, we're going to take that contract and we're going to make sure that usually we've already collected some and reviewed documents for your pre-qualification, your pre-approval, but we're going to now take that document and determine any additional documentation that we need. And we're going to collect all of that and we're going to issue disclosures. And what that is is a document that provides an estimate of what the loan product will look like. It is not a final document, it's an estimate. And you're signing things basically saying you're authorizing us to move forward. You understand you're going to get an appraisal. This is the basic outline of the loan. So once you sign that document via e-sign, then we can go forward with the loan process and submit it to processing and underwriting.
Okay.
At that point, the processors will do things like request your title work from the title company, which you will have chosen ahead of time. That's listed on your contract. They will request an appraisal, which you want to determine that the value of your property is what you're paying for it. You don't want it to be under. It would be great if it's over. That's kind of the idea, or at least at value. So they'll request the appraisal, and then they will submit the file to underwriting for its first review.
Yeah.
Once it has its first review, it's going to come back with what's called a conditional approval. A lot of people think they're automatically approved. Well, that conditional approval comes back with some common things for everybody, like what is the determination of the title work? They've probably underwritten it before the title company has gotten that back to us. What is the determination of the appraisal? They've definitely taken a first look before the appraisals come back, which takes a few days. So there are some conditions. They may have questions about your income. They may want some additional verifications, but you're basically approved. And then we work on those conditions with the buyer and send them back in.
Now, what do you not want to do while all this process is going on?
Well, you typically do not want to change jobs. You do not want to go out and buy anything that incurs a monthly debt, not a car, not furniture for the new place. Here's a great example of things that have happened in the past. For instance, you go out to City Furniture and you buy furniture for your new place at 0% interest, and the payments won't start for a year. It's still a monthly obligation. We have to determine what that monthly obligation is going to be at per month, and it has to go into your liabilities, and it can keep you from financing. So do not go buy anything. Do not change jobs. Do not move a lot of money around from bank account to bank account. We're required to track money moving everywhere it goes. And every time you do that, it's another layer of documentation that we have to request from you.
Yeah, so yeah, you just want to kind of go into this and be still. Like, here's my
right. Don't act unless you speak to your loan officer first and double check that it's not going to have a negative effect.
Mother, may I
Mother, exactly. And listen, also, we can't use cash. Just for everybody to remember, if you have cash, you need to deposit your cash and have it in a bank. We can't use cash that you have at home.
So no suitcases brought in at closing
Correct.
to pay for all this.
Correct.
Of cash.
We need to verify your funds and show that you have them, they're in the bank, they've been in the bank, etc.
You know, with a loan, it makes it so much more affordable with interest rates that are low to purchase a home than obviously taking out all of our cash. So at the end of the day, what we really want to do is, you know, get pre-qualified with a great lender like Cheryl Stokes, and then, you know, let this process go. And don't change jobs if you can help it. And there's some things that you could change a job for, right, Cheryl? I mean, let's not.
Yes. So you could be transferring to the area. Yeah. And you've been in the business for 20 years and you're moving to the area, and you have an offer letter saying, we're hiring this person because they're great in their field and we want them to come to Florida and work for us. That's a different story. You could, in the midst of a process, change jobs for more income in the same field. We'd rather you didn't do that, but it has occurred and it can be done. But my recommendation would always be, please wait. You know, unless it's a transfer situation, it's better to wait.
Yeah, it's 45 or 60 days just to get through the process, get into the home, and then do what you want to do, right? I mean, as long as you can pay your mortgage, we're not suggesting you don't pay your mortgage, but then you can go ahead and do those things that you want to do.
Right.
You know, Cheryl, it is always a delight and a pleasure to have you on this show or any other shows that we have. Today, we're offering a buyer's guide to anyone that's looking for free. It's an ebook. All you have to do is put your information below or direct message or private message us wherever you're looking at this. And we will get this over to you with, you know, an email because it's a great way to kind of, as you know, for many of us that haven't bought a home in a while, right? I mean, the last time I bought my home was 17 years ago. So it's a great way to go back and get a refresher on that home buying process if you haven't done it in a while or if you're new.
Yeah, it really is. And I do have quite a few clients who, if it is their home, let's say they're downsizing, they're retiring or moving from another area and they've owned their home for 30 years, the process is a little shocking to some people now because we just really do have a lot of things that we have to track and verify. And with the current situation, we have an extra level of scrutiny on things like income that we have to go through. And it does seem tedious to some people who are not prepared for it in advance.
Yeah, I love hearing that it's that preparation that makes it just go that much easier. Of course,
absolutely.
Once you go through this process and then they go to close, that has to be notarized. So that can happen with a mobile notary. It can happen at your closing site. If you're remote, you can go to a bank, to a number of places just so that you are going to notarize getting a loan.
Exactly. And, you know, we're doing it a variety of ways now. 9 months ago, almost everybody just went to a title company or an attorney and sat in the room and signed all their documents. Now, based on the situation, and we have so many people who are buying virtually, they're buying in other states, we can use that mobile notary. We can send docs to them via email and they find a notary. There are a multitude of ways that we can make sure that the documents get signed appropriately. They come back to us and fund. We just need to know in advance that that's how we're going to close the loan so that everyone can back up their time from there. Because remember, everything is time sensitive. We have to notify them with another set of documents 3 days prior to the day that they sign at minimum. And so we have to back that up from the day that they're signing, if they're signing away.
You know, it's good to know because, you know, now that we've come into the virtual world, it always makes me think of the Madonna song. We are living in a virtual world. I'm a virtual girl. Oh, no, wait, I think it's Material.
Yeah, Material.
Anyway, at the end of the day, we are very virtual these days, and you know you can do your mortgage that way as well. So
absolutely,
you don't have to look at the house. You can FaceTime it and virtually see it. You know, you can get your mortgage virtually and sign virtually, so that when you can travel about, you know, you can do that. So, Cheryl, any parting thoughts for folks that are listening to us today?
You know, my parting thoughts are it really is a great time to buy. I'm not a spring chicken any longer. And I remember when interest rates were 13, 18%. I mean, they're very low now. It's a very good investment. Housing is an investment, especially your primary home, in which, you know, that's a great way to build long-term wealth. Financial advisors would tell you, buy now while the rates are low, keep the balance of your money invested, also to grow long-term wealth. So, I mean, my thought process would be, if you're thinking about it, take a look at it, get an idea of what it's going to take. Maybe you don't buy today, but you buy 6 months from now if you're a first-time home buyer, but you start the planning process now and work up to the point that you can buy, because it really is an important thing to do as a young person to kind of start your life and go forward.
Without a doubt, it's the best way where we can accumulate wealth.
Absolutely.
If you do it properly, you know, from that perspective. Well, Cheryl Stokes, thank you so much. Again, if you're looking to get a copy of the ebook, make sure that you give us your contact below or direct message or instant message us. And as always, we look forward to seeing you on the next episode of Really Mary?
Really, Mary?
And until then, ciao.
Ciao.